Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, November 15th, 2022. The Bulls put in a decent day today, but they went right into the resistance zone that I was referring to, and from there we saw the S&P that went from 40.28 all the way down to 39.53. So that's I mentioned yesterday that this market's looking tired. Today, the CPI numbers that came out were better than expected, but we're still at like 7.8%. And they're anticipating that the Fed's going to stop or ease up on these rate hikes. And to me, they're not. That's why I'm not quite sure why they're getting this bold up over these reports. Sure, inflation's going down some. That's great. It's unfortunate that we're still at 40-year highs on it, but we are in the bullish time period, and we've been looking for the lows from when we first topped back in August. We said, don't be looking to buy until sometime in October. This is going to be an important low. I still believe it is, but right now we're in the bullish seasonality of things. But there's reasons to be believing that we're going to get some kind of nail biter to the downside or some backing and filling. So we have the gap here at 37.60. That was from the 10th on that. Today we had another gap, but that was filled. So right now, I would say that the first thing the Bears are going to have to do, if they're going to if they're going to try to make any kind of push to the downside, is get price below. I would say this part right here, right around that 39.10. If they do, there's support down at the 38.57. And then we also have the moving average at 38.30. So that's that. Now we also had that bearish wedge. This is just a target. I took it out on it just because I didn't feel like having all the lines. But this is telling us if the pattern plays out, and it's a pretty reliable pattern, that we could see the move come all the way down into if it's going to play out exactly, if it plays out, we could see the move coming all the way down to 36.50, which is the support here. I'm not saying that is the trade that I'm looking for on the short side. It is just a trade. It's a short scalp. Again, we're looking for 100 to 200 points on the S&P. Those are usually our trade targets. And if we just get down to the 39.16, that's going to be that would be 100 points right there. Now, if they head higher, we already know. I pointed them out in the report today, where they I would be layering in on the short side. And it's one of those things that, we have this gap up here that may get filled, but I still think that it's going to come down and then up before we fill this. And we would hit this trend line somewhere, we can almost put a date. 11/25 would be when it gets there. But again, it's not 100% when it's going to play out or how it's going to play out. What I know is this: is we may be forming some kind of little head and shoulders pattern, but I'm more, like I said, I'm more looking at, if they make the new high, take the other piece of the short position, and then when we get down to the 39.14, down to the 38.50, cover those up. Let's wait for support to hold, whether it be at the 38.30, or we come down and close the gap at 37.50, and then we look to buy. Because I've been saying the safest trade is to buy dips, but being that we have these massive sell signals on the 60-minute chart, and if we take a look at the daily chart, we actually have bearish divergences on that as well. So there's reasons to believe that we could get a pretty good nail biter to the downside. But again, the market's strong right now. I just think they're getting a little over exaggerated with these moves because no matter how you slice or dice it, we're still at 7.7% inflation. So the Fed has a lot more work to do before everything is said and done. So let's see what plays out tomorrow. Enjoy the rest of your night, and I'll talk to you guys in the morning.